Welcome to the Specialist Trading Weekly Stock Review for the week ending November 12th, 2010. We had a very quiet week this week, hardly had that many trades that actually were executed, and I think it has to do mainly with the market deciding whether we've hit some type of a short-term top. If you look at any indice chart from this past week, you'll see that we kind of stopped at some point going upwards, and we've started to come down lower. So we may be headed in a downward direction, but be that as it may, it was exemplified in a lot of our stocks being executed this week. But that's fine, because even though it was a very quiet week, we basically broke even on the week. And we'll go over each and every trade we had, but before we do, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results from this past week, but remember, we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock review. Okay, now because we have very few trades this week, it gives me time to go over a question that is really asked a lot, especially from new members, and that basically is, why don't we look at news or earnings when we're putting our strategies together? Why are most of our strategies just based off technical information or chart patterns or momentum indicators? And that's a very good question. Remember, all of our strategies are pretty much short-term to swing trading. We don't go into any longer term strategies, even though if you'd like to, you can apply all of our strategies on a long-term chart, such as a weekly or even a monthly chart. But for most of the time, we're basically looking at daily bar charts, even some intraday charts. But I think it really sums up why we do not look at fundamental news or earnings in the first place. And this was a story that came out, or an earnings report that came out this past week. On Wednesday, November the 10th, the Los Angeles Times reported that Cisco Systems Inc. said Wednesday that its earnings for the latest quarter climbed 8% from a year earlier. Now, the company said it earned $1.9 billion or 34 cents a share in the fiscal first quarter ending October 30th. Now, that was up $1.8 billion or 30 cents from a year before. Analysts say this provides fresh evidence that business spending on technology continues to recover from the recession. As I said, this was reported in the Los Angeles Times on November 10th. And the earnings came out the evening of November 10th for Cisco Systems. Now, just on face value, this appears very good. This is fundamental news. This is earnings. This is information about the company as a whole. And just as I said, off face value, someone who's new to trading or just is more of a fundamentalist or has that type of approach would say this is very good news. You should either buy the stock or look to purchase the stock, or even more, if you're currently long the stock, you should continue to hold. So let's look at the chart then of Cisco Systems coming into that day. As you see here, this past day was the 10th. So after the market closed, we had been in a very nice uptrend coming into that. After the market closed, the earnings and the news was reported. Now let's see what happened the very next day once that news had come out. Well, as you see here, it was a very large drop. In fact, I believe it was over 20% drop in the stock. Now, I'm not going to go into why it dropped or why maybe expectations were not met. The point being is that if you are trading, by trading I mean holding positions anywhere from a week to maybe 3 to 4 weeks, that is basically looked at as short term. Short-term traders do not need to look at fundamental news, because all news, in our opinion, is subjective. It can be interpreted 1,000,001 different ways. Someone could have read that news, such as we did, for face value and thought that's extremely good, let's buy the stock. Someone else could have read that news, having other information, and said that's not good at all, let's sell the stock, which it looked like the majority of traders did. So it's subjective. It's all, what you interpret and what the information you know for interpreting. And that's very difficult. There are people, traders and investors, that have that capability to do that. But it's very difficult. It's something you really can't teach. You have to have more of an intuitive feel. That's why people who excel in fundamental news do very well, but they've been around for a long time. If you're a trader, you don't need to concern yourself with these things. You only need to concern yourself with the setups, with what the chart is telling you. All right, now someone with a little bit of knowledge of specialist trading could have said, well, Steve, what the chart was telling me is that we're above the buy-sell line, which means we should be looking to buy the stock, which is correct. But remember, we don't just simply buy blindly if a stock is above the buy-sell line. We have to wait for some type of setup to appear. At this point, there was no setup in any of our strategies. There was possibly a setup right here with a strategy number 1, which would have been nice because you would have entered at these levels and it probably would have been exiting somewhere around here. So either way, you would not be in this stock. So, excuse me, looking at it from our perspective, it's true. Once we're above the buy-sell line, we're only looking to go long this stock, but we have to wait for a setup. Now that the stock is currently below, we're not even considering going long the stock. I know a lot of traders would say, wow, it's really cheap now, it's inexpensive, let's buy it. We're not even going to consider buying it. Now we're looking for setups to go short on the stock. This is the mindset of a specialist. Any other way is a mindset of a gambler. You're trying to, find the long shot if you're buying it right here. And that's not a professional mindset. So this is what we're trying to instill in you. This is what we're trying to teach in you. Remember, I've often said, if you're trading correctly, whether it's day trading or swing trading, if you're doing it correctly, it's very boring. So we're not looking for a thrill here. We're not looking for a real quick score. We're looking for setups, high probability setups, and then we're looking for high probability trades. Okay? That's why we don't trade fundamental news. It's just there's no high probabilities to it. It's very subjective. Okay, let's go over the stock positions that were initiated this week, and there were only 2, so we'll go over them rather quickly. Our first was in DTV. We had strategies 1, 3, and 4 giving buy signals on the same day. So let's look at it through the eyes of strategy number 3. Now, we went long on the 8th at 42.73, and we got stopped out unchanged on the 9th. And this was a subjective call. This was a discretionary call that we decided to get out unchanged. We moved our stop to break even, and we'll show you why. First things first, where is price in relation to the buy-sell line? Price is above, so we're only going to be looking for a buy setup. Now with strategy number 3, we always apply our proprietary Bollinger Band setup, as you see here. This is not the most common setup for Bollinger Bands, the way you see defaulted on most charting packages. This is a proprietary setup, and if you're not familiar with it, it's very simple to calculate, but you do have to go in and edit the settings, and we give you all that information on our website. So we have our proprietary Bollinger Band telling us that we have this nice short-term uptrend in place, plus we are above the buy-sell line. So now we know that we want to buy. Now we have to put the calculations together and find our setup bar. Now a setup bar is a bar that meets all of the rules, that there's only one setup bar that we can look for, and once we find this, this is going to tell us whether we can go long or not. So as you see here, this is our setup bar circled in blue. It meets all of the rules, meaning that we can go long if we trade one tick above the high of this setup bar. And once again, if you're not familiar with how to come up with the calculations to find the correct setup bar, this is on our website. Okay? So, once we traded above that setup bar, we went long at 42.73. Okay, now our exit using strategy number 3 is once price closes, not trades above intraday, but closes above the highest Bollinger Band, that's where we'll exit. So this is a dynamic exit, meaning that it's not static, it's not set in stone already. We really don't know where we're going to get out. We could get out, let's say, somewhere way up here if we happen to have a tremendous up day and we close way up here, or we could get out one tick above the highest Bollinger Band. We don't know. So we have to kind of wait and see where it's going to close. So our exit comes with a question mark here because we don't know where that's going to be. We have our stop just below the low of the setup bar. And then we simply wait. Now, one thing which we do give you the discretion to use, this is a suggestion we've said, that when we have a bar that touches the midline, the mid-Bollinger Band, you have the discretion or the opportunity to move your stop to unchanged, because this means that you're somewhere near the exit levels. So once we saw that the very day that we got long, that we went way up here, we crossed the midline and we're looking, actually maybe even thinking about we probably would close above that day, we moved our stop to unchanged. And lo and behold, the next day we got stopped out at 42.73, unchanged. And that doesn't look like it was actually that bad of a decision, because as you can see here, we've pretty much gone sideways. We've been trading water, and we closed pretty bad today, being Friday the 12th. So, you know, we don't know yet, but just looking ahead, this looks like it may be some type of ledge, and we may be headed lower. So possibly it was a good idea to get out unchanged. Who knows? Possibly Monday, this will turn around and will go back up, and you could have had a nice gain here had you left your stop here. This is why we call these strategies. These are not systems, because strategies give you the opportunity to change and to alter some of the plan.